Hi, my name's Allan Madan. I'm a chartered accountant in the Mississauga, Toronto, and Oakville regions of Ontario, Canada. The topic of today's short video is how to income split with your children. Income splitting simply means transferring income from yourself to your child in order to save tax. The reason you'll save tax is because it's more likely than not you're in a higher tax bracket than your child. The first way to income split with your children is through the use of gifts. By way of background, if you gift or loan money to a child and your child earns income or a gain from that gift, the income will be attributed back to you, the parent, but the gains won't. So gains are not subject to attribution, and that's why this strategy works. Let's take an example. You decide to gift Apple stock, and you did this 5 years ago when Apple shares were valued at $10 a share. The Apple shares 5 years later, today, are now worth $330 a share. Your child, seeing that it's gone up so much in value, decides to sell those shares. The gain on the sale of the shares will be included in your child's income and not yours. Because your child is in a low tax bracket and likely has a lot of tuition credits, he won't be paying much in the way of tax on that gain. So when gifting to a child, it's a good idea to gift assets that will appreciate in value, such as non-dividend paying stocks or land. Remember, investment income is attributed back to parents, so you don't want to gift assets that result in investment income because that investment income will be attributed back to you, the parent, defeating the whole purpose of income splitting. The second way to income split with an adult child in this case is by giving a cash gift for investment in a TFSA. Your adult child will take that cash gift and contribute to a TFSA. Investment income inside TFSAs are not subject to any income tax, and neither are withdrawals. This is a great way to help your child save for university or maybe eventually purchase a home. The third way to split income with an adult child is through the use of RRSPs. In this strategy, you provide a cash gift to your child. Your child takes that money and contributes it to his RRSP. But the key here is that while your child contributed to his RRSP, he will not take a tax deduction for the RRSP contributions made at this point in time. The reason being is that your child is in a low tax bracket and can't really use those tax deductions. Down the road, two major benefits will arise. Number one, any investment income generated inside the RSP will not be subject to tax, and hopefully the RSPs will have grown in value over time. The second benefit is that when your child secures a high-paying job and decides to deduct the contributions that were previously made, he will get a big tax benefit for the deductions of the contributions. The fourth and final strategy that I'm going to talk about for income splitting with adult children involves the use of a corporation. In this strategy, your corporation provides a loan to your adult child. The loan is included in your adult child's income. Hopefully your adult child is just entering college at this point and doesn't have much in the way of income and will therefore pay little tax on the loan. Down the road, a few years later, once your adult child secures a high-paying job or earns lots of business income, he will then repay the loan to your corporation. The repayments made will be tax deductible to your child on his tax return. So to recap this strategy, initially your child gets a tax-free loan, which he could essentially used to buy or pay for tuition. And several years down the road, once the loan is repaid, your child gets very generous tax deductions for the loan repayments. If you found this video useful, I encourage you to visit my website, the link for which is shown at the bottom of this video, http://madanca.com. Also, get access to my free report, 20 Tax Secrets on How to Beat the Tax Man, the URL for which is shown at the end of this video. So go ahead, visit my website, get access to my free report, and save yourself a ton in taxes. Thanks for watching.